After a bumper October, November started with back-to-back sell-offs. Wall Street thrill ride derailed as as Dow sees AI, crypto bets and crypto bear markets wipe out almost entire 2025 value gain. The record longest government shutdown has markets sounding the alarm on food aid and aircraft cuts amid peak shopping in holiday season. In global markets, it was a sea of red last week. From gold to cryptos and stocks to crude, all major assets ended last week with losses. The crypto engine is sputtering, with Bitcoin and its peers enduring a violent unwinding that shattered confidence. Bitcoin was the biggest loser, crashing 5.5% last week and briefly falling below the $100,000 mark. Brent crude prices fell over 1% to trade below $65 a barrel. The dollar and gold markets marked modest losses. Now shifting focus to the Asia-Pacific stock markets, only Chinese stocks closed out in the green, with gains towards the end of the week. That comes despite weak economic data print through the week, suggesting further upside is limited. Bets for Indian stocks to hit fresh record highs fell flat, with the Sensex ending the week nearly 1% lower. Japanese stocks were the biggest losers, falling from record highs. The Aussie index too closed 1.3% lower. In the Americas, the S&P 500 fell to its lowest level since October 22nd. The Wall Street benchmark has now erased $1.3 trillion over the past week. U.S. tech stocks marked their worst week since April. Wall Street veterans warned that AI-fueled tech valuations were outpacing fundamentals. The government shutdown is also hitting investors and the economy pretty hard. U.S. airline cut flights as the shutdown drags on. More than 700 Friday flights were cancelled by the four largest U.S. airlines. Reflecting the gloom, the Canadian benchmark index fell 1.2%, reflecting a broader gloom. The only exception was the Brazilian index, which closed the week with 3% gains. Across the Atlantic, the story was no different. All European benchmarks closed out last week with losses. The French CAC led the declines in the region. German DAX reflects the economic troubles in Europe's growth engine. UK's FTSE index is weighed down by the upcoming budget. The South African index too closed in the red. Now, having looked at market moves, let's now turn to the overall economic outlook. In Asia, India still remains the bright spot, with momentum indicators pointing to a wealthy speed of growth. Personal income and GST tax rate cuts are already boosting consumer spending, with more positive numbers expected from a trade deal with the US. Now, on the other hand, China's growth engine factory activity fell to the slowest pace in 6 months and marked the worst stretch in nearly a decade. Surprisingly, exports too fell significantly. Despite a US truce, Beijing faces deflation risks. A recession is in real estate and falling consumer demand. Trump's trade rhetoric continues to weigh on the outlook for most of the other region countries. In the Americas, the record longest government shutdown is really hurting economic activity and throwing American lives into chaos. Public anger is rising with each passing day. Weakening business activity and a cooling job market is likely to push the Fed to cut rates again next month. However, the central bank's worries about driving in the fog from lack of data is likely to continue. The outlook for Canada, Brazil and Argentina is still negative because of Trump's brinksmanship. In Europe, Florence or Frankfurt, every place in the region is currently a good place for the European Central Bank. However, the numbers don't paint the same story. Europe's growth engine, Germany, is still stuck in stagnation. France is not likely to meet its budget target, with politics compelling economic disasters. UK continues to struggle to fill a budget black hole. The size of most economies in Europe are still below their pre-COVID levels. European countries quickly need a clear, long-term strategy and less wishful thinking with full pockets.